Namaste. Good morning, good afternoon, all esteemed professionals from financial services joining us today from across the world. I am humbled to be presenting at this year's World Financial Innovation Series happening in Manila, Philippines. Before I start, I would like to quote visionary leader Mahatma Gandhi's words. The future depends on what we do in the present. My name is Anuj Kumar, and for the next 20 minutes, I'll be talking about how digital lending can contribute in economic upshift. I will also discuss how economic growth can be delivered through collaboration among various stakeholders, the financial institutions, the consumers, the merchants, the fintechs, the technology service provider. While I was exploring Southeast Asia, I found some very interesting facts. I would like to refresh you all with some of them. Southeast Asia is a region with impressive diversity among people, culture, history, and naturally. In fact, I would say 11 countries of Southeast Asia have it all to say that this is one of the best region across the world. When I was exploring geographically Southeast Asia, I was mesmerized to know there are 25,000 islands. And I would say some of them are as beautiful as paradise on earth. I was discussing my visit to Southeast Asia. I have been to Singapore just before Philippines. And when here I joined, I was having a discussion with my colleague. He told me that sun rises in 5 different time zones in Southeast Asia. And people of Southeast Asia speak in 800 different languages. If we look statistically, the culmination of 11 countries, all the world people in starting of this decade, due to a catalyst, COVID-19. Before pandemic, we could not imagine multiple activities being executed completely digitally. COVID brought us a change called as digital. Today, we all can imagine multiple activities happening completely digitally. For example, we executed our offices from home, like work from home. Let's see how Southeast Asia people reflected upon this opportunity and started adopting digital. There are 40 billion new internet users came online in 2021, bringing the internet penetration in Southeast Asia to 75%. And I would like to quote, Philippines is one of the most potential area where this internet users are onboarding. Let's see some numbers and bifurcate them. Post-COVID, there are 60 million new users till the 2021 first half. In total, till 2021 first half, there were 350 million digital consumers. With this rate, as we speak, when I will be finishing off my talk after 20 minutes, there will be 1,500 new digital consumers being onboarded onto the new digital adoption stage. Let's talk about our next stakeholder. We just saw that how consumers are reacting to it. The next stakeholder, merchants, basically focused on 3 key areas. One is digital platforms. Digital platforms are consumer-centric solutions where merchants sell their goods and services directly to consumers. For example, e-commerce websites, Amazon, mobile apps. The second focus area was digital financial services, where merchants adopted multiple services, for example, lending, payments, insurance, and many more. Another focus area for digital adoption among merchants was digital tools. They started using digital tools to enhance their operational efficiency at the back end. They wanted to optimize their revenues also and increase the profitability, so they started off with digital tools. I just talked about 3 focus areas. Let's see how was the focus or belief, I would say, system changed for digital merchants. Now, 1 in 3 digital merchants believe digital platform made them survive COVID-19 on the business front. This belief system went stronger. Digital merchants, they believe that 83% of them that digital platforms can provide more jobs. 84% of them believe digital platforms can improve livelihood. 87% of them believe digital platforms can sustain revenue. 88% of them believe digital platforms can provide more opportunities. We talked about the potential coming up from the consumers. We talked about potential coming up from the merchants, how wholeheartedly both of them are accepting digital. Today, as we speak, digital financial services are contributing $11 billion revenue in Southeast Asia. And while Southeast Asia is harnessing the potential of digital, there is a huge potential coming up from the merchant. There is more than 70% merchants who still accepts only cash today. When this harnessing will continue, I would like to talk about future 2025. In 2025, the revenue coming from digital financial services will reach to $38 billion. Here, it will be very interesting to know the bifurcation among the digital financial services, how the different sectors are performing. The clear winner is digital payment. The gross transaction value will reach to $1 trillion in 2025. The another is digital lending. Loan book size will reach to $110 billion. Digital investments. The assets under management will reach to a significant number of $75 billion. And digital remittance, total flow with $28 billion. Digital insurance with gross written premiums, $8 billion will go on. We need to map all the digital offerings in the ecosystem to understand completely the positioning of digital financial services. While I will be mapping all these popular services on the map, I'm very sure about this that you all can also experience this map around yourself. So the map looked like this. E-commerce is a clear winner, where consumer is very comfortable shopping on the e-commerce websites, and lending, investment, and insurance are lagging a little behind. Consumers are not that comfortable taking loans on mobile phones as of now. Here the potential is. I will talk about only the digital financial services, and we will focus on digital financial services as of now. Payments is a clear winner. It has crossed the point. At this inflection point, you can see remittance and lending, investment, insurance are following up. I will take you back to the lending because lending is a very important contributor for economic growth, economic upshift. There is a innovative methodology to deliver lending, which is coming up and providing us a huge opportunity, which is embedded lending. Here, multiple popular digital service providers embed the digital financial services and deliver them to the consumers. Grab is a very good example. A ride-hailing service provider embedded the digital financial services like loans, credits, investments, insurance, and payments. There is another section. In fact, in fireside chat, we were discussing about this, that huge volume will be coming up from the consumption debt. Generation Z wants to enjoy consumables today. For example, washing machines, fridge, and I would say the favorite among younger generation is mobile phones. The principles I'm going to talk about is also valid for investment debt. Investment debt here is the large finance taken by individuals for purchasing a house or large finance taken by SMEs for setting up a business. We need to understand where exactly our consumers or customers are. For that, let's see the first player in this, which is e-commerce. There are websites, mobile apps, for example, Amazon. Most of the younger generation is doing shopping from there for the consumables. The another important player is consumer stores, the physical consumer stores. I strongly believe in the ecosystem, they will always coexist. And good part is physical consumer stores will be using digital financial services through different methodologies. For example, for payments, they will be using mobile apps and innovative lending instruments will provide the credit lines for them as well as the consumers. For example, buy now, pay later for the consumers, credit limits for SME merchants. We need to clearly understand that most of our consumers are with the e-commerce or the consumer stores. Sometimes they behave like competitors. Sometimes they are collaborators because consumer stores go to e-commerce, sell their goods and services digitally. This collaboration among these two multiplies the revenue and they share revenue among themselves. We need to understand clearly from where the digital financial services are being rendered. The first one, fintechs, and they are growing day by day. All can experience this. I will talk about fintechs also in detail after some time. The another player is financial institutes. Let me unravel the complete ecosystem of consumption debt. There are consumer stores. When they collaborate with the revenue get multiplied from 1x to 2x. When e-commerce stores and consumer stores collaborate with fintechs, the revenue get multiplied to 3x. I would like to ask the audience, what will be the right replacement of this question mark at financial institutes. Hold on for this thought. I'll be covering that in next few slides. We covered number of fintechs in Southeast Asia region. Isn't it a very coming up after the digital adoption decade started off? Let's see how the bifurcation of these fintechs is in the ecosystem. I will talk about top 3 of them. The first is alternative lending. With 603 fintechs in the ecosystem, alternative lending is one among the top. Another is cryptocurrency. This is generation Z, I would say, and they are contributing 663 fintechs in the ecosystem. And I strongly believe that day is not far when our children will ask their pocket money in cryptocurrency. And they will buy their video games and chocolates through cryptocurrency. The another is payments. This category is a top performer in the fintech. We all can experience around us while we do the digital payments across merchants in different stores, that this is running very fast. Now, I would like to showcase a fintech map to you. With all the 3,408 of fintechs, but yes, this is an impressive fintech map with multiple categorization of logos, which presents us a good picture of how the Southeast Asia fintech ecosystem is evolving. We talked about fintechs. The question is how financial institutions are going to flip the coin and harness the potential of complete ecosystem coming up from e-commerce websites, physical consumer stores, and fintechs. For that, like we are discussing since morning, that we need to understand the customer's needs. The customers who are using this, they are being segmented into 3 main categories, I would say. One is banked, underbanked, and unbanked. I will speak about 3 key needs of these customers. There can be many, but I'll be talking about primarily 3 of them, the top 3 of them. For banked and underbanked, convenience is one of the important key to access the digital financial services. Value is important across the ecosystem or across the segments, but yes, the banked and underbanked are choosy in nature. Wherever they find the right value, they adopt that particular financial service. For unbanked customers, easy all-time access is the primary key. In Philippines, when it consists of multiple islands and people living in the remote areas as well as in the cities, the unbanked population require a digital financial solution which can provide the key value, easy all-time access. We need to understand the needs of financial institutes also. Financial institutes can be on the very high level segmented into small, medium, and large. The day has gone when small, medium, and large banks used to come with different offerings. Today is a fighting market where smalls are also coming up with innovative technologies, innovative platforms to become medium, and mediums are also coming up with the same kind of technology to become the large. And the key need for all these 3 segments is faster go-to-market. For that, the digital products that they want to go into the market as fast as possible, they need a flexible platform capability, like we were discussing in the time back, the fireside chat also. For this flexible platform, it must consist of multiple key elements like smart monitoring, latest tech, artificial intelligence, machine learning, data analytics, and a holistically end-to-end secure and scalable system. We understood the needs of customer and the financial institute, but what is the solution? The solution is one lending platform. But what about the fintechs? How they are going to coming into the ecosystem with financial institutes? For that, this lending platform must behave like a hub and spoke model where multiple fintechs can be enabled and integrated as fast as possible to deliver the services to the consumers and enable the operational efficiency at the back end for the financial institutes. Here, I would like to present FinOne Neo, coming up from pioneering fintech for last 35 years, which is an end-to-end lending platform. We can provide all these needs. We focus on customer needs, financial institute needs, and the fintech needs. This platform covers the end-to-end horizon of lending, which is sourcing, servicing, collections. We offer mobile platforms, web platforms, API ecosystem, and many more. Now I am coming back to this metrics, and I would like to leave it to financial institutes to harness the right value of this ecosystem. It's up to the financial institutes for a span of 6 months, 2 months, or 1 year, or 2 years, how much value they want to drive. 10x, 100x, 1000x. I would like to thank Mr. Henry Ford for his kind words. Coming together is beginning, keeping together is progress, working together is success. I leave you all with various collaboration of different stakeholders, financial institute, consumers, merchants, and the technology service provider. Thank you.